Good morning, viewers. A warm welcome. Sage here. You're watching 𝐊𝐼𝐴 TV live from Sydney. And this is the Global Markets Roundup show. We'll bring you a glimpse of the equity, currency and commodity markets across the globe. Let's firstly start with a glance at how the global markets fared last night, beginning with the US markets. The three major US stock indices rallied to record closing highs on Friday as the financials and other economically focused sectors rebounded from a sell-off sparked by the growth worries earlier in the week. And the S&P 500 was up 1.13% to 4,369.55. The Dow Jones rose 1.30%, reaching 34,870.16. The Nasdaq Composite gained 0.98% to 14,701.92, and the small cap Russell 2000 was up 2.17% to 2,280. Investors appeared to have shrugged off concerns of the Delta variant of COVID that is fast spreading in some states. And on Thursday, markets had retreated sharply on a bevy of economic concerns. And 9 of the 11 major segments of the S&P 500 were in positive territory. And the financial and energy stocks were the top movers, while basic materials shares were the bottom movers. Analysts have forecast around 65% earnings growth rate for the S&P 500 companies in the latest quarter, higher than 54% they estimated earlier, according to Refinitiv. Let us now look at some specific stocks under the spotlight. Clothing company Levi Strauss & Co. stock rose 1.36% after forecasting a robust full-year profit, mainly from the higher demand for jeans, tops and jackets. And then the Chinese ride-hailing company DiDi Global Inc. stock jumped 9.14% after seeing a significant drop in its prices since its debut last month, and the stock plunged after China launched a cybersecurity review of the company. Let's move on now to the futures and commodities markets. The gold futures were up 0.46% to $1,808.55 US dollars per ounce. Then the silver increased by 0.77% to US $26.188 per ounce, while copper rose as well 1.80% to reach $4 US $0.3412. In the energy space, the Brent oil increased by 1.98%, reaching $75 US $0.59 per barrel, and WTI crude was up 2.32% to US $74.63. Then in the bond markets, the 30-year Treasury bond yields were up 4.24% to 1.991, while the 10-year bond yields increased by 5.82% to 1.363. In the currency space, the US dollar futures index decreased by 0.33% to US $92.102. And this was the latest from the US markets. Now it's time for a short break, and please stay tuned as we will soon take a look at the European and Asian stock markets.
Hi, this is Andy Liu broadcasting from 𝐊𝐼𝐴 Media Studio in Australia, and I'll be hosting the new 𝐊𝐼𝐴 Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to 𝐊𝐼𝐴 TV and join me.
Welcome back, viewers. Hope you're enjoying your morning so far. This is Sage. You're watching 𝐊𝐼𝐴 TV live from Sydney. And this is the Global Markets Roundup show. Let us now take a look at the European and Asian stock markets. Well, European stocks jumped more than 1% on Friday, posting their best session in 2 months and erasing all of this week's losses as investors sought bargains after one of the worst sell-offs this year on the global economic recovery worries. The Pan-European Stock 600 index gained 1.3%, with sectors that took a hit earlier this week, such as automakers and miners, surging 4% and 3.4% respectively. The mining sector marked its best session in 2 months. The London markets traded in the green zone after the release of various macroeconomic indicators, and moreover the UK economic recovery slowed down during May 2021 as the UK GDP had shown a monthly growth of around 0.8% during May 2021, while it rose by 2% in the prior month. And furthermore, the Office for National Statistics had shown a marginal drop of about 0.1% in manufacturing production and growth of around 0.8% in industrial production during May of 2021 on a monthly basis. Now we'll take a look at some specific stock movers. In the Ftse 250 listed Vectura Group shares climbed by around 14% after it had received a takeover offer from Philip Morris worth approximately £1.045 billion. Then Omega Diagnostics shares rose by around 3% after the company responded to a press release issued by the UK Rapid Test Consortium. And meanwhile, the outsourcer Bunzl shares went up by around 3.6% after the company was upgraded to buy rating by the investment bank Berenberg. Similarly, Burberry shares went up by around 3.8% after Goldman Sachs had upgraded the stock to a buy rating as well. And moving on, German government bonds, one of the world's most liquid safe haven assets, headed on Friday for the biggest two-week fall in yields since June 2020 as investors saw a longer road to recovery from the COVID-19 crisis than expected. And notably, the European Central Bank's move to set a new inflation target had little impact on the market, where investors have been chasing safe assets as the coronavirus Delta variant spreads, raising a new threat to economic growth prospects. And on the other hand, the Japanese shares fell to a near 8-week low on Friday on worries of a slowing economic recovery after the country declared a COVID-19 emergency, but losses were trimmed on hopes that the Bank of Japan might have stepped in to support the market. And the Nikkei share average fell 0.63% to close at 27,940.42 after losing as much as 2.48% earlier in the session. The index, losing 2.9% this week, closed below the 28,000 mark for the first time since May 17th. And the broader topics dropped to 0.41%, down to 912.38. And meanwhile, the yield on the 10-year Japanese government bonds was unchanged on Friday as investors traded cautiously after the yield hit a 6-month low in the previous session amid sharp gains in global bond prices. Then in the bond market, the 10-year JGB yield was flat at 0.025% after falling to 0.020% on Thursday following a plunge in US yields, and as Japan declared its fourth state of emergency for Tokyo to curb a new wave of coronavirus infections. And moving on now, China stocks edged lower on Friday after data showed the country's annual factory gate inflation remained uncomfortably high and underlined growing strains on the economy. And the major indexes barely moved for the week as Beijing's surprise hint at the monetary easing earlier this week failed to provide support and raised worries over the country's economic recovery. And the blue chip CSI 300 index fell 0.4% to 5,069.44, while the Shanghai Composite Index ended flat at 3,524.09. In the currency space, China's yuan rebounded on Friday from a 2.5-month low struck in the previous session, while the cabinet flagged possible cuts to the bank's reserve requirements. But the Chinese currency was still set for the 6th straight weekly loss. The overriding factor on Friday was broad weakness in the US dollar, which eased from a 3-month high against a basket of currencies due to investors' fears that the spread of the COVID variants will dampen the global economic recovery. And next, the South Korean shares fell on Friday to mark their worst week since late February on concerns over the rising COVID-19 infections as well. The Korean won weakened while the benchmark bond yield rose, and the benchmark KOSPI fell 34.73 points or 1.07%, down to 3,217.95. It fell about 2% for the week. So that's how the European and the Asian markets performed last Friday. It's time for a short break, but after the break we'll take a look at the Australian stock market, so please stay tuned to 𝐾𝐿KINE TV. Property by 𝐾𝐿𝐼𝐴. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest lowdown on the property market, tune in on 𝐾𝐿𝐼𝐴 TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐾𝐿𝐼𝐴. A very good morning to you, viewers. Welcome back. I'm Sage and you are watching 𝐾𝐿𝐼𝐴 TV live from the Sydney studios, and this is the Global Markets Roundup show. Let's now look at the Australian share market. And on the first day of the week, the ASX 200 may see support from certain tailwinds as Wall Street indices registered record closing highs, while an uptick in the oil prices is expected to support energy stocks in today's session. After Thursday's sell-off in the IT shares, the closing of the last week had seen a sharp recovery, with the Nasdaq 100 recovering closer towards record highs. So today, the Australian tech shares such as Afterpay Limited, BrainChip Holdings Limited and 𝐵ZIPCO Limited could also show some recovery. Then in the energy space, on Friday, the crude oil prices ticked up for a second consecutive day as the commodity traders increased their positions, reacting to falling US inventories. The sign of the strong Asian demand from both India and China added support. And on that note, the Australian energy shares such as Viva Energy Group Limited, Santos Limited and Woodside Petroleum Limited could gain investors' interest. Taking a look at the yellow metal space, on Friday, gold prices inched up towards their best week in 7, underpinned by a weaker US dollar and concerns over the outbreak of the Delta variant of the coronavirus, which could hamper the global economic recovery. And the gold stock's momentum needs to be closely monitored during the day. Then the local miners such as BHP Group Limited, Rio Tinto Limited and Fortescue Metals Group Limited could be on the investors' watch list. Well, on Friday, the benchmark iron ore futures in China traded lower and logged their fourth consecutive weekly fall as concerns over steel output controls suppressed demand for the steel-making ingredients. And the most actively traded iron ore futures contract for the September month delivery on the Dalian Commodity Exchange closed 3.7% down on Friday at 1,163 yuan, or in US terms $179.25 per tonne. It was down 1.6% for the week. The nickel prices hit their highest levels in 4 months on Friday on the back of the strong seasonal demand, and copper and other industrial metals also gained on the last day of the week after the highest commodities consumer, China, announced that it would reduce the amount of cash holdings with the banks as reserves to boost economic recovery. And that's all for now. Thanks for joining us on that report. Sage signing off, but please stay tuned to 𝐾𝐿𝐼𝐴 TV for more live market updates, and we'll be back with more news on the markets, economies and diverse themes and sectors.